That's when the
Mm-hmm.
market is on sale. That's when the pros are ready to get in. That's when Warren Buffett is waiting. He's got, 160 some $billion sitting on the sidelines waiting for something like what we're seeing this week to happen.
As always, Broken Record, a jam-packed show. We had another phenomenal week in these markets,
Right.
and everybody's probably scratching their head. What the heck is phenomenal? We had some big down days, but that's all opportunity. I mean, tech has been taking a beating for the past 3-4 weeks or so. Oil has really been going up. We're seeing that at the prices, but there's a gas shortage, so a lot of crazy things happening. The yield, that's up sharply, which is causing some issues as well. But the CPI data, that was a huge number this week on Wednesday. What's been happening with these financial markets? Want to make sure we can help our listeners make better decisions, but have that financial literacy. But also, what are the rules? What are the tools to make those decisions?
Yeah, well, it's a lot of things you just threw out there, but
Pick one.
let me talk about what's happened here with the CPI. What people have been waiting for and concerned about for some time has been the potential for inflation to come into the economy, and then potentially have the Fed maybe raise interest rates or cut back on their asset purchasing. And what happened, the CPI did come in on the high side. The estimates were for a 3.6% increase. It actually turned out to be 4.2%. So that's pretty high. They significantly beat the estimates. And these markets have been sitting, kind of around all-time highs. But a lot of that movement up to those all-time highs has been based on the economy reopening. So it's already priced in.
Mm-hmm.
Now, what people were really concerned about was this inflation issue, and now it's causing some real concern. The fear is that increased inflation results in higher interest rates, as I mentioned, and then also a reduction in asset purchasing. So is that a bad thing? No, it just means that different things will do better. As long as the market's open, there are going to be opportunities there for us. But in a high inflation period, technology doesn't do very well. That's why we've seen a big pullback in the tech stocks. What does do well? Financials and energy. And this week, when we had the big pullback after the CPI number, the financials, the bank stocks, some of the energy companies did very well. And that's why it's so important to be agile, to be flexible, and to be able to rotate from what isn't working into what is working. There's almost always going to be something that is outperforming and doing well. And that's why it's so important to not just have a kind of that on cruise control buy and hold strategy where you just put together a portfolio and you sit with it. It's important to be able to take advantage of these movements that we're seeing. And oftentimes that means getting out of maybe one industry or one sector and rotating into something else. But, where we start, Josh, with our students is talking about some of the mistakes and the challenges that the retail trader, the public, and let's be honest, the amateurs, that's pretty much what the public is, what they're faced with, what they're making, the mistakes they're making, because they're not the same mistakes. I mean, the smart money is not making those same mistakes. They just don't do it. And the two big components, I think, of what the retail trader is doing wrong, number one is letting emotions dictate their decisions. When you have a high volatility market like we're having now, highly volatile market, that's where emotions really kick into overdrive and almost always causes people to make the wrong decisions.
Well, the big one is, as these markets have been tumbling some of these days this week, those are fear emotions.
Yeah. And the problem is people don't know how to control those emotions. I mean, if you see your portfolio basically evaporating, pretty soon your gut takes over and makes decisions for you. And typically when people reach the point where they can't handle that pain anymore and they sell, it's where? Right at the point where the market's going to turn around and go back up. That's when the market is on sale. That's when the pros are ready to get in. That's when Warren Buffett is waiting. He's got, 160 some $billion sitting on the sidelines waiting for something like what we're seeing this week to happen. And the second problem or the mistake is that people are not using, they don't have and they're not using with confidence a process that is simple, repeatable, and proven. So, you need some rules and the appropriate tools to implement those rules. The number one rule which really kind of incorporates all of those tools, is a plan, a trading plan, proper a trading plan that incorporates the control of your emotions and then also that use of a simple, repeatable, proven strategy. You can't just decide, hey, you know what, I'm going to tell my brain and my gut not to get involved today. It doesn't happen that way. You have to somehow control it. We believe the best way to do that is with a step-by-step process, a set of rules that you follow, but it's a set of rules that you follow for everything you do, whether you are trading in an up market, a down market, whether you are trading stock or some of the assets we'll talk about later, futures, forex, or options, whether you're a short-term trader looking for short-term goals or long-term. That's how you keep this simple and how you actually increase your confidence, because you know you don't have to go out and try to find something different for different market conditions. And then also, you're going to come into the market with preconceived ideas on what should happen, and you have to control that too, because those preconceived ideas are based on your experience and maybe what you have heard from other people, typically having you buy high and sell low, exactly the opposite of what you should do.
Yeah, that's those erroneous thoughts that people have and what they think is actually happening. But with inflation really lurking around right now, you do need to be agile in these markets, because when Al's talking about being agile, it's we have up markets, but we also have down markets. So it's being able to make proper decisions no matter which way the market goes. Because if you have an up market, great, we want to be buying. When you have a down market, you want to be selling, and that's called shorting. Al, we had some great moves this week, some big moves this week. We've seen some great down days, which is great for the person that knows how to short the market.
Right.
But I want to talk about the smart money coming up next, but why it's so important to follow that smart money and not trade and invest against them. We will be right back.